Hello, Scotty. Joined here by Fast Money, Tim Seymour of Seymour Asset Management, Andrew McOrmond of WallachBeth. And guys, the XLI is turning lower along with the broader market. This despite good earnings from United Technologies this morning. That stock makes up around 4% of the ETF. And Andrew, good numbers from United Technologies today. 2019 earnings guidance above consensus. How do you play industrials if you like them using ETFs?
If you like them, I still think XLI is the right play. It's an absolute beast. Trades over 14 million shares a day, has 10 billion shares of AUM. And I spoke to, an asset manager this morning, a very respected sector rotation, Astor Investment Management. They actually sold out of their XLI in the fourth quarter and are still out of it because they see other sectors kind of outperforming.
Tim, the problem I have with the XLI, again, this cap-weighted index, know what you're owning. 5 stocks.
Well, you own Boeing.
Union Pacific, Honeywell, United Technologies. 5 stocks. 35% of the whole index. Is that necessarily what you want? Is that a good way to play this?
Well, again, look at the components of this. So you have, UNP, which reports tomorrow. UTX is about 5%. I mean, you have a heavy weighting in aerospace and defense. You have a whole lot in rails and ultimately in transport. So to me, if you think about the economy and that part of the investment landscape people have been very concerned about over the last 3 months, you can argue it's right in the center here. And yet, a name like Boeing, to me, is very defensive in this current trade war spat. Free cash flow. So again, know what you own.
And even though we're up, the industrials are up 6% for the year, we're really still in a downtrend. If you look at the chart from October down, we're still moving down and trying to break out of that. Can we do that? Yeah,
look, industrials on a 12-month basis have underperformed the broader market by about 10%. If we continue to focus on global growth and headwinds to cyclicality, industrials will underperform. I'll say this, though. If you look at the valuations of the XLI and composite, you have priced in at least where we are in the global economy right now. In other words, valuations look pretty interesting.
Well, Andrew, let's turn to a subgroup here. Besides industrials, airlines. We're going to get Southwest tomorrow, American and Alaska. There's very limited opportunities to play airlines using exchange-traded funds. Jets is the big one that's out there. JETS is the main one. Southwest, American, United Continental. How do you play this?
Yeah, well, a few comments on that. I mean, as far as the performance, I think after Delta's earnings on the 15th, Jets was able to stabilize as well as the airlines with the S&P 500. I'm usually very pro-ETF, and Jets is the way to play it. However, the airline sector does not expose to much single stock risk as other ones. So if you really like beta of choosing one of the airlines, or don't like beta, you want some alpha and choose one of the airlines, then I would say you choose 2 or 3 of the airlines and avoid the ETF, because it generally goes with the flow.
50% of the ETF here is just 5 American airlines. Even though there's 30, you can buy Lufthansa in this. It's a pretty small weighting. Tim, we got to run, but we've seen airlines dramatically underperform.
Big divergence within the airlines. American has massively underperformed. Again, Delta and United, even before they gave their numbers, they had actually guided lower. I think we've gotten a lot of the bad news out.